Now, for the past few months that I've been making content this year, there is one particular video that I made, and I kept on emphasizing this one thing, that it's never lack of money, it's always lack of skill set. I always want to prove this on proven strategies and then results. Now, yeah, guys, I want you to show them. Look at this. How much is our balance?
It's 1,500.
So today I happen to deposit $100 on my trading account, and guess what? We did $100 to
$100 to $1,400.
You see that? Yes, you can see, and that is a real account with our extras. So traders, again, I had a very good sniper entry, man. I'm going to keep on mentioning this. See, when you're trading, you just need a good strategy. When you have a strategy, you have an edge. I'm going to be explaining to you the breakdown of this trade and how did I catch it, because price has done 1,000 pips. If you can have a good strategy and only trade when your strategy gives you a setup, trade. No strategy, don't trade. So let me jump onto my computer, and then again I'm going to show you. Again, we just did this. So this is my expense. This is just more proof. How much did we close off? As you can see right there.
$1,400.
Guys, it's never lack of money, it's just lack of skill set. Let's jump into the video. Make sure to subscribe if you're new around here, and we pray YouTube doesn't strike this video. So traders, now again, if you want to really yield a lot from trading, you need to trade one pair, and this is the pair, XAUSD. This is the pair that I've been trading for the past 2 years. So the reason why I was stuck onto this one pair, this pair moves 400, 300 pips in a day. And guess what today, traders? This pair today moved over 1,000 pips down. Again, let me explain to you how I take my trades and my strategy, and how do I have an edge over my strategy and everything, the risk parameters and everything. So this is my H1 time frame. We are going to remove all this analysis and go to the daily time frame. So first things first, always, and this is what I always do, guys. Whenever you come onto your daily time frame, you mark out the previous highs and lows of the previous day. So this is, we zoom in properly like this. So you can literally see our previous day is this one candle right here. So we're going to name it. We're going to put an arrow there. So then you come and select these lines and then put one there and then put one here, as you can see right there. Why are we doing this? The higher point, this higher point right here, which is the previous high, is acting as a resistance, and this is acting as a support. Now guess what? When you look at all these candles are either going up, meaning if this candle, look, these previous candles, if it went up, it meaning the new candle will break its previous resistance. You can see. So let's say this one, it broke this resistance right here. Actually, let me do this. Look at these traders. So let's start from this candle. You can see this candle, this right here, it broke. You see, it broke its resistance right here, and it played in between. The same one right here broke resistance. Even the candles that are coming down, meaning we have a new candle, either it's going to break this zone or this zone. And guess what? If price consolidates in between right here, this strategy will literally tell you when to go into the market and when not to be in the market. So first things first, mark out the previous high and the low. And then the second thing, we mark out the previous 50% range. Now you come and apply Fibonacci retracement from here to here, and then look out for the 50% range. Why the 50% range? Because sometimes when price exceeds the middle part, 50% range of the previous day, you can understand now, you can have a better picture of where price is going to go. Either it's going to go in an uptrend or a downtrend using 50% range. After we delete our Fibonacci retracement, and then we're going to make this white, and then I'm going to also make this white, as you can see. Now, after we zoom into the 1 hour candle and then look at the price action in between whatever price did yesterday. Now, guess what, traders? This is what we had today, and I'm breaking down today's trade. Remember, I caught sales, I caught massive sales. Now this is what we had. We had price yesterday range in between this zone, and most of you guys remember yesterday we had buys from here to up here, and then price consolidates, and then we had the sweep, as you can see. Now let me explain this. Anytime when you have a previous high and a low and the 50% range, most times price is either going to come and consolidate in between here and either come back down to the previous low, or it will play around here and then close above and then shoot up. Now, here's how my strategy works. My strategy works through so many scenarios. Now, let's say price has already broken the previous high and has pumped up like crazy. Now, how do we trade here? Most times we don't trade here. You don't trade here because here price is doing all-time highs since gold has been trying to push back to the upper side. Now, it had broken this lower zone, which has been all-time high. It pushed up here. Again, it has broken another all-time high. Not an all-time high like all-time high, but I'm saying this week is all-time high. Now, when price pushes up like this, you don't jump in. You let price play out and let it give you price action to tell that price has to come down. Reason why, whenever we have price break this previous high, it has to reach a time and come back down. Why am I saying this? We had price push up and we didn't have any recovery. And guess what? Today, price again pushes up. You see, traders, now we need to have a recovery. Well, I was looking out for a pattern that tells me price is going to come back down. And guess what? The pattern, it has to be a reversal pattern. And you know, when you see a reversal pattern, it tells you that momentum is dying off. Now, this is what brings me to now the 4-hour candle. Now, let's go back to the 4-hour candle. Look at the previous data. Now, when we zoom out like this, look at this, traders. You can see that we had this resistance that price was trying to reject, this same resistance. So let's mark it out like this, just like this. You can see. So I'm marking out the last green candle before we had sales, meaning that is our supply zone right there. That is a supply zone. What is a supply zone? A supply zone is any zone in the forex market that causes a downside move. Now, when you look closely, we have huge candles that were coming down from up here. And this is now the all-time high, like the all-time high for gold. You can see we have price like really dipping down like crazy. Now, indicating if price ever comes back to that zone, what is going to happen? Price is going to reverse. And that is what happened. That's what I'm telling you. When price breaks out of your high, you know, mostly in this case, wait until price momentum starts dying off. Now, let's zoom into the smaller time frame, which is the 15 minutes time frame. No, it's actually the 5 minutes time frame like this. So I'm going to reset my page like this. Now, look at these traders. So the white line right here that you're seeing is where price broke out and started pushing up. Now, you can literally see price started pushing up, but it's trying to, as it's giving us signs that it's coming back down, but those are not enough signs. When price breaks out of this zone and it has done an all-time high, look out for a pattern that tells price is going to come back down. And guess what did we have here? We had a rising wedge. You see this? So price started consolidating in between right here. It first created this zone right here, as you can see, and everyone thinks price is going to come back down, as you can see right there. You see? It created that zone. It pushed back down onto this order block, and guess what? It swept whatever liquidity was up there. But as it's doing this, it's just filling out. It's forming a pattern, which is called the rising wedge. Now, what is a rising wedge? A rising wedge is a reversal pattern to the downside. So you just have to mark it out, you see, like this. And then also mark the lower part, as you can see. Now, this is our rising wedge, as you can see. Now, a rising wedge is a reversal pattern to the downside. You only take the trade when price breaks and retests our rising wedge, as you can see right there. You see, traders? Now we know why price is going to come down. Now, how do we catch our entry? Now, you have to really always be on the smaller time frame. Now, this one I was on the 1 minute time frame. Let me show what we had on the 1 minute time frame, traders. Since we already know now price is going to reverse. Remember, traders, price is already now even at a reversal point, which is a very strong supply zone. We know sales are coming in, but I didn't know sales are going to come in this aggressive. You understand? But sales actually had to come in aggressive because, again, yesterday price pushed up. We didn't have any recovery. Today price has pushed up crazy, meaning whatever has to come today, price has to dip a lot. You see, traders? So this is what brought me to the 1 minute time frame. So this is what we had on the 1 minute time frame. We had like some small price action. I don't like usually use 1 minute time frame, but they can also be helping sometimes. They can be of great help. So let's do this. I show you my entry, just like this. Now, traders, I want you to look closely. So what we had price sweep here, but it swept in a way that it gave us an aggressive up to down here. And then after we had price go back and tap into this fair value gap that was created right there. And now that is where most people, you always take your entry right here. You see, traders, most traders, you take your trade there because like price can't really go through that zone, putting your stop loss there, as you can see. So this had to be my entry, but I didn't take the trade from there. What I did is I waited for a clear confirmation on the 5 minute time frame. And this is my clear confirmation. Look at this, traders. This was a very clear confirmation. So we had our rising wedge properly, price jumping in between. Now look at this. We get a sweep that sweeps up here. We have price push up. Everyone thinks price is going to keep on going up. And guess what? It pulls back. Now this one candle right here, this is a bearish reversal candlestick pattern. The body is really literally pulled down. Tell us that whatever is coming now, price has to dip. Guess what? Price first dips until this part right here, where we had something like another order block. So I first caught my first buy trades here. After I exited when price filled up the gap. Remember I showed you the gap on the 1 minute time frame. After that, I waited until price closed below this resistance, which it was a support now, which is going to become a resistance. This zone right here. Let's mark it out. So this zone right here, I was waiting for price to close below that zone right there. And guess what? Price did that. And mostly here up on the trend line, as you can see, we had already momentum. You see, this is a reversal candle, and guess what? Price, this one candle right pushed up here to pick up maybe liquidity, and then it closes below like this. And guess what? That time we were almost clocking, I think 6 in the evening in the New York time, and the rest was history, man. I caught my trade, You know, and I kept on adding layers since I was trading on $100 accounts. The only way you can make money with $100 is by layering. So that is how I caught this trade, traders. And guess what? Now I take this trade targeting, first of all, there's so many order blocks. So the first order block was here. As you can see right here, this was the first order block. And you can literally see price swept through all that order block. And it kept on dipping. And this would be the second trade. Reason why? Whenever an order block is broken, price will come and retest on it. So you can literally see price broke this order block. You see? And the reason why this was a strong order block, you can see in the morning price bounced off this order block, but it didn't like really sweep it. This is why this strategy is really good. You literally know before price can give you what you want, it has to first take out people. So I first caught my first trade. Actually, I can't lie to you guys. I caught my first trades and I was up almost $3,000 profit. And then I put my break even on this one trade because, again, since I was looking out for a pattern, I thought price had given me this pattern, which is a W pattern. You see, this looks like a W pattern. You see this? Not a W, but an M pattern. So I thought price had given us an M, and now it has come to this order block. Now it's bouncing off to come and back to the neckline, but price didn't really, just swept through. And the moment price closed above here, I knew our price is still taking its time. It has to sweep out so many people. And the other thing I'd ignored my supply zone. So my supply zone is this upper one. So I'd ignored it. This is why you shouldn't ignore like the previous data. This right here. And then guess what? Broke the order block. We tested on it, and guess what? More entries right here, and then you take your entries as you're targeting for price to come back onto the previous high. Now let me break this. Anytime when price breaks a previous high and it goes up crazy, it has to really come back down. And literally, whenever we're trading the forex market, we base off previous data. Data yesterday price had gone up crazy. Data today price had gone up crazy. Where are the sells? Whatever goes up has to come back down. You just have to look in between. Now, let me mention, before I can continue, guys, make sure to subscribe to this channel, man. Make sure to subscribe. Like, I always share this important information, how you can literally play around with even the smallest money. With the smallest money, imagine if you had $100 and that's your last money. Imagine, and that's your last money, traders. Literally, you can see. And that's your last money. You can see that? From $100 to $1,500. You can see, and that is an XNES account, as you can see right there. You see? So literally, even when you have your last money, as long as you have a proven strategy that you have back tested, you can literally make money. Traders, I don't know how much I'm going to sing this. Have one strategy, only trading gives you a setup. This strategy has given us 3 setups this week. 3 setups this week. 3 setups. I would make everything in this one video, but I won't. 3 setups this week. Only trade when you have a setup. When you don't have a setup, don't trade. Stop gambling in the forex market, traders. Trade only when you have a setup. And when you have your last money, traders, guess what? You can still make it out of trading. You just have to trade once in a while. Avoid over trading and all these things. I've showed you this nice trade. 1,000 pips. Let's measure out this. Look at this, traders. Let's measure from here. From where I took my entry to down here. Look at that. 1,000 pips. From up there, it's 1,000. But from here, it's 820 pips. Crazy money, traders. Look at this, traders. Again, I'm happy that I get to do this and then show you proof. See that? Traders, you see that? I get to show you proof. Anyone can make it out of trading if you have a good strategy. Please and please, this strategy is very easy. Mark out previous highs and lows. Mark out the 50% trend. If price breaks the previous high, let it do its all-time high. It has to reach a time and come back down. But now the timing on when price has to come back down, understand, they have to first sweep people. Don't be among the people that will sweep. Be among the people that will come in after the trade has really played out. And then now it's time for your entry. As simple as that, traders. Make sure to subscribe and I'll see you in my next. Peace.